Hey guys, so just a quick update. I passed my two-step evaluation, so that means I have access to a master account that I will begin trading shortly. But the primary focus of this video is to go over some tips and tricks for trading Forex, because I've recently been getting a lot of emails and comments asking me for some of my ideas, so I'm just going to talk about some of the things that go through my mind whenever I trade. Now, I'm not a perfect trader and I don't know everything, so you don't have to listen to me, but this is just how I perceive the market. Starting off, the first thing I do is I look for ideas that trade against other people, and I basically try to squeeze them. The reason for this is because Forex is a zero-sum game, and the only reason that somebody can profit is if somebody else loses money. So the idea is to make other people lose money. Getting into an example here, I typically mostly trade the Euro USD because the Euro is the most liquid pair in the entire market, and I believe every other pair is somewhat correlated to the Euro USD in some way or another, even if the correlation is minor. You can just look at an example here. This is a chart here, and as the Euro falls in value here, I personally would only be looking for buys because I like to trade against other people. Say the price is coming down here, I personally would not short down here. I would be looking for buy opportunities because all of these people that just went short and just went long, you can trade against them. See, I'm on the hourly chart right now, and let's just take an example. Like, for this entire few days in a row, every person that has entered in this pair, whether they're short or long, down in this area, you'd be able to trade against them. Now, what I mean by that is, if these people are short, then you can squeeze them by going long down here. Also, if they're long here, you can also squeeze them by going long down here because you technically have a better entry than them because you're long at a cheaper price. That's why I like Forex, because as the price comes down, I like to look for buy opportunities. And with indices, it's not exactly the same. Indices can spike a lot harder and carry on a trend for longer. Okay, so the next point is support and resistance. So basically what I like to do is try to pair these two together. This is the main strategy that I trade, and also volume, but we'll get into that later. Okay, so support and resistance. This is literally a perfect position for me because if I were looking at this chart, I see that price is becoming mad exhausted all the way to the downside here. And then we're creating all of these support levels. And then as we come back up and retest it, this is prime real estate for buys right here. I would personally buy here, set a 50 pip stop loss. So yeah, so I would basically pair the fact that I'm squeezing people that have already entered positions here previously, and I'm combining that with the fact that we're at a key level of support here. So I would personally go long here. Okay, anticipate future volatility is probably the most important thing that I look for before I take every single trade. This is an extremely complicated idea. I'm just going to briefly talk about some key points here that I look for, but basically to start off, I go to a website called ForexFactory.com, which tells you the future news events that are scheduled to occur. So basically what I do is I come up here to the filter tab and I filter only the red folders because that's all I care about is high impact news. So then I apply the filter and then I look for the upcoming days. So today this is November 2, so this is the upcoming day here. So I can see exactly every single red folder and the potential volatility that comes with it for weeks in advance. So basically when I see this, I see presidential election, congressional elections. These are going to bring strong volume to the markets, and this FOMC on Thursday is probably going to be one of the biggest days of the month. So right off the bat, even before I look at the charts, I'm already anticipating that there's going to be an extremely large amount of volume for this upcoming week, and I can create my ideas for my trades according to this information that I've just acquired. Let me give you an example. This is a good example because I'm actually in this trade right now. This is the New Zealand dollar, and you can see that we're like just crashing, like just completely crashing. And I really like where we are right now because we're at such a low point that it's really cheap down here, and everybody that has entered like within the past months or so, whether they're short, they're in profit and they would like to cover, or whether they're long, then they're just getting demolished and I can get a better price than them. So basically I like this position to go long here. Another reason that I went long is because when I look at the ForexFactory, I see there's so much volume here that is about to occur that I'd like to trade against these people. What I mean by this is basically for this FOMC and all these big red folders, I believe that we are more likely to spike up than to spike down, because that insane amount of volume is not likely to carry on exactly the way things have been going for the past months. Because think about it, if everybody is already short, what's the likelihood that in a zero-sum game that people are going to be short on the most volatile day right at the bottom? You know what I mean? It's more likely that we will spike up for this FOMC on the New Zealand dollar than it is that we will spike down. Now, of course, we could spike down. There's nothing absolute about the Forex market whatsoever. Everything that I say is just based on probabilities and odds. And this position is extra crispy because there's a couple red folders that are specific to the New Zealand dollar. So this position is going to get very wild next week, and I believe that it is more likely to spike up than down, so that's why I took this position. I'm expecting to hold on to this position for a week or more, and the only reason that I came to this idea is because of all this upcoming news that happened. If none of this was going to happen, I would not even consider this idea. I wouldn't be risking like 100 pips. I wouldn't be in this trade for a week. I would be like day trading it. For this particular idea, I really like trading with a smaller size and using larger stop loss and take profits because I'm anticipating this news. Now, if I was not anticipating this volatility, then I could get easily burned by the market. Or even worse, if I was going in blind to the volatility, I might put a 20 pip take profit when the real move that is going to happen is probably more like 50 pips plus. Okay, so the next thing is the risk reward and position size. I have a pretty unorthodox view on this risk reward because I believe that risk reward is somewhat irrelevant and your ideas are all that matter. Let me give you an example. Let's say I went long right here at the price that we're at right now. If I put a 50 pip stop loss, I would be somewhat likely to get stopped out. Now, if I put a 100 pip stop loss, I would be twice as likely to be stopped out. Now, the difference in stop loss does not make my idea better or worse. My idea is exactly the same. My idea is that this will go up. So all I'm doing is allowing breathing room by putting a stop loss. So I think this is completely arbitrary and it doesn't matter what your risk reward is. I see some people like to shoot for a 2-to-1 risk reward, which is good. That's okay. I think everybody has their own preference, but I don't think it's really important to think too much about. And position size, the only thing that you should be thinking about is how much you're willing to lose and can you trade the next day. There's nothing else that matters. Will your account live if you take this loss? That should dictate your position size and risk allowance. Okay, so I also have take profits at appropriate times. This is just kind of like something that I just do myself. It's not really that important, but basically I can give you an example. Like sometimes if there's a massive spike in my favor, then I will just exit the position and take profits. You can see how I've done this in my previous videos. Okay, so now I'm just going to go over a couple tips for the funded accounts, and recently I've been using funding pips, so that's just what I'm going to be basing my information and strategies on. For the two-step evaluation, the rules are pretty straightforward. You can't lose 5% in any given day or 10% total, and you can trade news and hold over the weekend. It's a pretty lenient challenge, but things get a little stricter with the master account. Currently, these are the rules that you need to worry about, and I know that these are all the rules because I trade these accounts a lot. I'm quite familiar with them. So basically, it's the same rules as before. You can't lose 5% per day or 10% overall, but also they have this news trading rule where you can't open or close a trade within 5 minutes of a red folder that I was talking about previously. So within any of these US dollar red folders or anything, you cannot open a trade within 5 minutes prior or after. And that's strictly for the master account. Also, they have a hidden rule. What I mean by this is when you go to the trading rules page, they have tons of rules all listed out. Let's reach 8%. Everything is listed here. Everything of importance is listed here, except for one thing. Down here, all the way at the bottom, they have a trading strategy, and they're talking about expert advisors and high frequency trading. And then they mention toxic trading flow. What does that mean? When you open up toxic trading flow, talks about maximum lots, which is okay, that's acceptable. And then down all the way down at the bottom, only if you scroll all the way down to the bottom do you realize your biggest loss should not exceed 3% of the account size on the master accounts only, which is an extremely important rule every single person needs to know about before they start trading on a live master account. Because if you lose this rule, then you will get a hard breach on your account and you will lose everything. And this rule is not listed on their actual rules page. You have to open up a separate link, and then scroll all the way to the bottom to understand this rule. I've been trading for years now, so I don't really think about any of these things consciously. I just instantly know that I'm going to be thinking about these right when I sit down. So I thought I might share some of these with you guys. Thank you guys for watching.